everyone. Thank you for joining us today, for coming to today's workshop, What You Need to Know About Running a Business But Didn't Know to Ask, presented by Sean Keating. My name is Lisa Kelly. I am the Adult Programming and Outreach Manager for the Long Branch Free Public Library. Before we get started today, I just want to mention that we have a full slate of in-person and virtual programs coming up for March, many of them celebrating Women's History Month and Irish Heritage Month. And I invite you to please follow us on our social media, sign up on our website for our monthly newsletter, which you can actually also do through our Facebook page. And that way you will stay informed and won't miss out on any of our programming or special events. We have some movies this month too in our movie theater. If you haven't seen it, it's well worth coming in and taking a look. The library is open for in-person browsing and for all of our normal services, so please stop by and see us in March. And so at this time now, I would like to introduce Sean Keating. He's a very experienced financial advisor, and he's going to share with small business owners and those who are starting to think about opening their own small business everything you need to know about understanding the different business entities, operating your business, and what you need to know about your tax requirements in New Jersey and for the IRS, and much, much more. So at this time, I'd like to welcome Sean Keating. Thank you for joining us, Sean.
Thank you.
Nice to see you, and for presenting our workshop today.
Hi everyone, thanks for joining. I know it's a Saturday afternoon and a lot of you would rather be out having some fun. But learning how to operate our businesses, which basically be our livelihoods, is an important topic. Now, most people eventually start a business because they love what they do. And they don't really always think about the aspects of what it takes to run a business. I have 30 years in the financial industry. I had spent the first 20 years of my life on Wall Street, where I was not a business owner, I was an employee. Until about 10 years ago when I decided it was time to hang up my own shield and become my own business. Work for myself. Like most of you, I loved what I did, but at the beginning I didn't think about everything it took to run the business itself. Being good at something isn't always enough. We also have to know the operational side. Being good at your job is, in your task or your trade or your knowledge skill set is very important. But a lot of business owners get tripped up on what it takes to actually keep the business operating. So, yeah. So what I want to do is I want to share some of my experience, some of the things I've learned, and over the last 10 years, independently, and 20 years before that when I had helped other businesses from the Wall Street side. So here's a couple of things that we've done. So I'm a certified financial planner. I'm also an IRS enrolled agent. So I'm a partner in Rosso Financial Group. We help people manage their private wealth, set up retirement plans, manage their money, 529s, regular investment accounts. But I also have a tax practice called Patriot Financial Advisors, where we can help business owners with these tax filings, payroll, bookkeeping, and those kind of services. Located right here in Long Branch. Also have an office down in Seagirt. So feel free to look me up if you have any questions after the seminar. Happy to talk to anyone. Just call and ask some questions. So quick disclosure time. Lawyers make us do this. None of this is designed to be advice. This is strictly for educational purposes only. The idea is to introduce you to concepts that you may not have thought of, which will become important to you as a business owner. Each one of these topics will affect each person differently. So I'm going to talk in very general statements, not applicable to any specific situation. But it's to get you familiar with the topics themselves so you can think about how they might apply to your business. Or speak to one of your trusted advisors, whether it's your financial advisor, your tax advisor, your business advisor, or someone else that runs a business, a mentor type person, who can help see how these things might apply to you specifically. disclosures. I am a licensed financial advisor, so we do offer securities and licensed products. They're offered through Newbridge Securities. So understand this is not an attempt to sell any product or service. Again, it is just for educational purposes. So, here's a couple of the topics we're going to touch on. What is a business? What are the different types of business entities? Creating a business plan. How do we get the funds to start our business? How do we pay the taxes on those businesses? How do I use my business to prepare for retirement? How do I insure my business? And the different types of free resources that are available through the state, not only to help you get it started, but also become a mentor program to help make sure that you can maintain it and grow it, for your family or for sale or whatever your eventual goal is. Now, the state and the federal government offer lots of programs that are free of service or a very minimal cost. So particularly for new business owners, I highly encourage you to seek out these programs. Some of them are pretty easy to get a hold of. Small Business Association, County Economic Development Associations. There's a mentorship program called SCORE that's run out of the community college libraries or community colleges. And again, these are people and resources you can find out about all of these things at little to no cost. Most of them are free. These are all funded by the state and federal government. So talk about what is a business. According to the dictionary here, a business defined as an organization or enterprise that is engaged in commercial, industrial, or personal activity. Sounds very dry. A business is anything we do for an attempt to make a profit. People always ask me, but I'm not a business. I just do this on the side. I take headshots, or I just photograph a couple of weddings, or I just help my buddy do home repairs, or I do plumbing on the side. Anytime that you engage in an activity and you're compensated for that activity, whether it's through barter, trading services, or someone pays you, you have officially become a business. People say, well, but I haven't filed anything with the state of New Jersey. I never told the IRS. That's okay. That's what we call sole proprietor. That's one of the types of businesses we're going to cover. So the definition of a business is any activity you engage in for the attempt to make a profit. Now, a lot of times businesses start out as what we call hobbies. I love to do woodworking. I make some arts and crafts. Maybe I make $100 a year. That's a hobby. It's never intended to make a profit. I don't make any money on it. So in the IRS's eyes, I report the $100 I made, but I can report the $100 in expenses so I don't have to pay any tax on it. But by calling it a hobby, I'm letting them know that I'm going to continue to engage in this activity for a long period of time, but I'm never attempting to make money on it. It's just something I love to do. But the IRS is okay with that because they're not going to let me take any losses. So it's an agreement we have. I can earn money, and eventually, if I don't earn enough, I'm not going to pay taxes. But I report that to them so they'll let me to continue to engage and I'm not breaking any rules.
Is there a place where you would report it as a hobby in your tax filing?
Yes.
Really?
It's a great question. So how do you report a hobby? On your Schedule A, is where you would report the losses. And on your Schedule 1 of your personal tax return is where you would report your income. Now, a lot of people say, what about your Schedule C? That's where you do a personal business return. Again, this is a hobby, not a business, so it does not go on the Schedule C. It's listed as other income on your Schedule 1, and you take the losses on your Schedule A. And that offsets the income so you don't wind up paying tax if you didn't make any money in the activity. But it's important to understand the difference between a hobby and a business because a lot of people say, I want to buy this fancy photography equipment. And I'm going to take a couple of headshots, make $50, but I'm going to write off $20,000 worth of video equipment. If you don't make profit after X number of years, the government might knock on your door and say, but what was your intent to make a profit? If you can't prove it, we're going to go back and we're going to say you never should have taken that deduction and we're gonna fine you for it. And we're gonna go back and collect the tax deductions that you took, and we're gonna teach you a lesson. So we wanna be careful that we don't mix up the two. Now, it's okay to run a business and it not succeed. That happens all the time. That's different than deliberately having a hobby which you just wanna take losses for on your tax return. Right? It's a very distinct difference. So starting a business doesn't mean you have to become Bill Gates or else. There's lots of people that just love doing what they're doing, they make enough, and that's perfectly fine. Some of the most common types of business. The sole proprietor is one we just talked about. I never formally formed anything. I was coming out of the grocery store the other day. A little lady needed help getting her groceries to the car. I helped her. She gave me a $5 bill. Congratulations, I just became a food delivery business as a sole proprietor. I did nothing, I filed nothing, but I got paid for doing an activity. That's what we call sole proprietor. So you would do that on a Schedule C. Very simple, I would record I made $5, and then if I had any expenses incurred, like what it cost me to drive to the grocery store to earn those $5, I would report that as an expense. An LLC, and we'll go into the pros and cons of each of these in a minute. An LLC means I have formally registered with the state that I live in this case we'll say New Jersey, but I've also filed to get an EIN number from the Social Security Department, the IRS. Again, this kind of activity as an LLC has many different types of entities. A single member LLC means I'm just by myself, but I want to create a legal business, not just myself earning an income, whether it's my primary income or a secondary income. A partnership, same thing as a single member LLC, except I got two people. Me and my buddy are doing the work. Very simple, based on the type of activity. We can either split the income and report half and half, or we might have to file a special tax return called a 1065, and then put that on our tax return. We've all heard of corporations, your IBMs, your General Motors, your Teslas, all these major global corporations. These are C Corps. Now the advantage to a C Corp is you can have lots of owners, and not everyone has to run the business. Some of them put up money, and other people run the business. The people put up the money are called shareholders, and they enjoy in the profits and suffer in the losses, but you don't have to go it all alone. Now there's advantages to having a corporation, but for a lot of smaller businesses, it's really too much to go be a C Corp. So the government created a way for smaller entities to become an S Corp. So I'm a single person, I own a trade or business in the area like flooring or plumbing, I make a pretty good living, but I want to take advantage of some of the tax loopholes that the corporations get. Well, the IRS has created this small business corporation called an S Corp, where I can become a corporation. I don't have all the formality that I have as a C Corp, but I get to take advantage of a lot of the benefits that these bigger companies have. So it allows, I don't use the word small business, but the legal definition, there is an IRS definition of small business. So small businesses can still get the benefits without having all the formality of being a major corporation.
Is it done by employee number?
No.
No?
So,
Or income maybe?
no, actually it's done by an election. It's the owner's choice.
Oh, I mean the IRS definition of small business?
25 million in revenue.
Okay.
IRS definition of a small business is under 25 million in revenue.
Okay.
So an S Corp is a tax filing election. So I can be an LLC, is how I filed the business, but as I start making more money, I want to file for permission to do my taxes as an S Corp. So you don't have to file as an S Corp when you started, you can always later in life say you want the tax benefits of being an S Corp. And that's as simple as sending a form to the IRS saying, in the state of New Jersey saying, I want to be taxed as an S Corp. It's literally just sending a form in. So it's a simple conversion.
Once you convert, can you go back, or that's it?
The ability to jump back and forth between entities creates a lot of paperwork nightmare. So unless there's a substantial reason, the IRS requires that when you switch an entity type, you stay that way for 5 years.
Okay.
But if there is a reason, a legitimate reason why you need to switch back, it can be done. You just usually have to explain. So the first one we talked about was a sole proprietor. That's where I had no formal formation of my business. I'm just really handy and I'm good at trades, so people hire me to help them around the house or to do home repairs, or I'm a handyman on the weekends. The pros of this is there's no formal setup. You just go out and you start making money. You're not registered with the state, so they're not tracking you for any fee purposes. Your business isn't registered, so there's no additional costs. There's no separate tax return. So you use a Schedule C, your personal tax return, so there's no extra work involved. Some of the downsides. Since there's no separation between me and my business, if I'm doing a trade, and say I don't put one of the floorboards down right, somebody trips, and they hurt themselves and they sue me. The problem is they're suing me, because there's no separation between me and my business, so I personally put that floorboard down that caused the problem. So that makes me 100% liable. So owners assume all the legal and financial risk. So I'm responsible for the damages caused, covering the legal bills, and any losses my business might have incurred. They become my personal debt, my personal problem. There's no ongoing business life. If I just decide I want to stop working tomorrow, I want to stop doing this activity, no problem. I never told anyone I started, so I don't have to tell anyone I stopped. So it's supposed to be a very informal way for people who want to do something on the side to do it. So we have these gig economies, like an Uber. You can go out, in some states you're 1099, some they make you W-2. But at that point you have a new side income. You never told anyone you got started, so if you want to stop, go ahead, you don't have to tell anyone you stopped. Problem is it's hard to borrow for your business because they're looking at you personally, not the business, and you're on the hook for all of it. So it's harder to borrow as a business under your personal name. And sometimes if you want to grow the business, it can be seen as a little unprofessional because you haven't gone out and formed a formal entity. So it depends on the type of business you want to do and how you want to try and grow the business. If it's something you just want to keep doing on the side because you love doing the work, but you do make some money so it is a little more than a hobby, this is a great way to get that entity started. The next common one is called an LLC. This is just like the sole proprietor, except this time I've told the state of New Jersey and I've told the IRS that I have this business. I have this flooring business. So the state of New Jersey says, okay, what are you going to call your business? Where can we find it? Where will it be registered? It takes a few minutes. You can do it on your own, or there's plenty of people you can hire to help. It can be more than one person. Again, that's when LLC becomes a partnership. It's very flexible. I have a business, I'm getting started on how big it's going to be. If I start as an LLC, and I grow later and I decide I need to take advantage of those corporate deductions, well, like I said, it's simply filing a piece of paper that lets me change the way I'm taxed from an LLC to an S Corp. I don't have to go back and change anything else about the business. Say I want to add people on. As an LLC, it's really easy to just add people to your business. So there's a lot of flexibility in how you structure it and what you want to do and how it changes down the road. It's a very fluid and flexible type entity. Again, it's easy to form. There's instructions on the New Jersey State website. If not, like I said, there's lots of people that can help. But just follow the instructions and you can actually form your own business yourself in about 30 minutes. You can get the tax IDs you need and you get the state registrations. Based on the type of business you're starting, the state of New Jersey does have a filing fee. I think it ranges from $75 to $125 based on the entity, somewhere in that range. So it's not that expensive. The other advantage is it creates a legal separation between you and your business. So to go back to that example where the floorboard wasn't laid properly and someone tripped. Well, now that I'm a business, I can get insurance for that business. So they're not suing me, they're suing my business. So I've now created a legal separation between what my work life looks like and what my personal life looks like. So I can protect my personal assets from those types of lawsuits or financial distress. So if something financially goes wrong with the company, I can separate it from my personal life. So those are some of the advantages. Again, being a single member LLC or a small business, it is still a little more difficult to raise capital, but it is easier. If you don't have a history of running that business, a couple of years, usually about 3 years worth of tax returns, it's difficult for a bank to say, I want to lend money to you, you don't have a track record.
Mm-hmm.
But the federal government has a program called the SBA, Small Business Administration. They have programs, and this is where those free resources can come in, that will help get you the money you need to start your business if you can prove that you have a good business plan, even if you don't have a history of running that business. So the Small Business Administration is a good place to start if you need to raise capital. Friends and family, if you don't need to raise a lot. If you do need to raise more to buy equipment or financing for some reason, the SBA is probably your best bet. There are startup costs. You have to get operating agreements. There are some formal legal documents that need to be in place. There's a small fee to the state of New Jersey. It's not an overwhelming expense, but you can expect to spend between $800 to $1,600 if it's a simple business to get it up and running with all your legal paperwork and filing fees. And it's more difficult to transfer ownership. If I'm a sole proprietor and I want to stop and someone else does the business, that's fine. But in this case, if I want to quit the flooring business and I want someone else to take it over for me, now we actually have to formally transfer the business. So I need to get my name and liability off of it and then transfer that entity to somebody else. So it does create that legal layer when we want to transfer activity or transfer the business. Now, a partnership, like an LLC, most partnerships are filed as an LLC, except there's more than one person. There's more than one owner in the business. That's the major difference between the two entities. The advantages are, there's more knowledge. You have more than one person, one more idea, more experience, more people to help with the workload, share the financial burden. So you don't have to come up with all the money by yourself. You have a partner, you can figure out how to come up with the money. Maybe one person puts up all the money, but the other person's better at doing the trade with the business, so one person finances it, one person operates it. So you could have completely different relationships inside the business. There's multiple structures. So one person who puts the money up can be the limited partner, and the person that runs the business can be the general partner. What that means is, I'm running the business, I get all the say.
You can do that within an LLC format?
Yes. So most partnerships start as an LLC, whether they add a second person later or they form together. It would be the same process as forming the LLC, except there's just check the partnership box. During the filing process, you would just say there's two owners, and it would produce it as a partnership versus a single member LLC. But it would follow exactly the same process for filing. You'd need the same paperwork. In this case, the fee might go up a little bit more for the legal documents because now the operating agreements might have a few more layers to it. How do we resolve conflicts between the owners? How do we talk about dissolution? So again, it was probably more $1,000, $800 to $2,000 maybe, as opposed to a little bit less in the filing setup to get the documents correct. Again, the partnerships are usually documented. It is possible, and particularly in the real estate industry, A lot of people do house flipping or some renting. They normally act as partners. They legally in that space, you don't have to file a formal partnership. You can just split the revenues and split the costs, and then put that on your individual tax return. But some businesses do require that you do formally register the partnership. So whether you do or don't have to formally register your agreement to work with somebody depends on the specific industry you're in. So that's why you might have to file this separate tax return called a 1065. Now that's if you are required to form that formal partnership because of your industry. Now we do know sometimes, as much as it's helpful to have that many decisions and that much intellect, sometimes having multiple people and multiple opinions makes decision-making a little more complicated. And again, the same thing with the LLC. Transitioning the business is a little more complicated than a sole proprietor because we have to create a legal transfer of the business as opposed to just saying, hi, John, have my business, I'm out. Now, we all know corporations. IBM, General Motors, Tesla, Microsoft. There's a lot of knowledge, usually a lot of people in those types of businesses. More people to work with, shared financial burdens. A corporation has shareholders, so it's a lot easier to transfer ownership because all you have to do is sell your shares to somebody else. None of the legal structure of the business needs to be changed. And establishing credit is much easier under a business. Now you can do it under an LLC and a partnership, but it might take a little longer time, again, because it's a little less formal. But you do want to start, if you are going to go through the process of forming a business, an LLC, a partnership, an S Corp, a C Corp, you do want to go through the process of trying to establish business credit. What that means is, I have a trade, I'm an electrician. Well, I need to go buy supplies. Do I want to use my personal credit card to buy all that equipment for my business? Now, obviously, when you're just getting started, you might have to do that. But if we start establishing business credit on day one, hopefully by the end of year one, when I have to restock all those supplies next year, I'm now using my business credit card, not my personal credit card, to fund and run my business. Now, this becomes important when we talk about the IRS later, because they want to see a separation between your personal life and finances and your business life and finances.
How do you open a business credit card if you're just starting the business, though? How do you do that?
It's a great question. So like I said, when we form the business formally, we get a tax ID number called an EIN, and we're registered with the state, let's say New Jersey here. I would go to stores that are friendly to startup businesses, and I would open a store credit card. And there's a couple of supply stores like a Staples or a Grainger or one of these, forgetting WB Mason.
Mm-hmm.
You know, you can buy your pens and paper, or Home Depot might do it. Staples is usually pretty good about. They'll give you very low limits, but they'll give you a card quickly. You know, maybe they'll give you $250 or $500. But at the end of the day, that allows you to start establishing that credit.
Mm-hmm.
So now your business is building a reputation of paying its bills on time, which makes it easier in the future to get bigger credit lines, or maybe getting a running tab at Home Depot or one of your supply stores or software vendors, because now you have a proven track record of financial stability. So having a separate EIN number, because we filed a formal business, gives us that ability to create a financial entity of its own, separate from us personally. So that way, say 5-10 years from now, there is a problem with the business, none of that financial burden comes back to us personally. We can separate all of that liability under the business itself and not hurt our personal lives. You'll most likely have to fill out, I don't know any corporation that doesn't have to fill out an 1120 then, it's a separate tax return. there's dual taxation. So if I'm a C Corp, the business itself pays taxes. If I'm an S Corp, an LLC, a partnership, or sole proprietor, the business files a tax return for the sake of notifying the government I made money. But the company itself does not pay taxes. That's what we call a pass-through entity. Those revenues or losses pass back to us personally on our personal tax return. So we get the advantage of taking those gains and losses at our personal tax rate, which is usually going to be much lower than the corporate tax rate. C Corps, however, pay tax at the entity level before any of the money is ever distributed back to the owners. So IBM files a tax return. IBM pays taxes. It takes the residual revenue and then pays dividends back to its owners, who then pay tax again. So in a C Corp, the money's being taxed twice.
So, and if the owners were also taking a salary on top of receiving dividends, will they kind of be taxed 3 times?
No, because you're still paying the same tax in your personal return.
Okay.
Now, it's a great question though about salaries. If I'm an LLC, or sole proprietor, or partnership, as an owner, I cannot pay myself a salary.
Oh.
I'm allowed to take what they call owner's draws. So during the year, yes, I need money to put food on the table, to keep my gas and electric on in my house. So I'm always allowed to take money out of my business. That's called an owner's draw. And then at the end of the year, when I reconcile my P&L, I've determined how much money the business made, and whether I took it out or not, I'm going to pay tax on 100% of that money. So the business made $50,000 at the end of the year, but I only took $30,000 out during the year. I still have to pay tax on all $50,000. That's the part where it's a pass-through. The business doesn't pay taxes, the person does. So whether I took the money out of the business or I left it in there so the business could operate better, I still have to pay personal taxes on those funds. In the C Corp, the money can stay in the business because the business has already paid tax on it. It doesn't, by law, have to distribute it to its owners. There are laws about how much it can hold back before it has to make distributions. But those are a little more complicated for... Call me if you have those questions. If you have enough, if your revenues are that high, give me a buzz. And there's setups and annual fees you need to pay. So all of these registered businesses on an annual basis have to renew their registrations. So there's an annual registration fee. Now, the S Corp is the best of both worlds. It's a combination between being a simple business like an LLC and getting the tax benefits of being a corporation. Now, it makes more sense to do this formation if the business has larger revenue. Why? Well, remember I said that an LLC and a partnership, all the money flows through to the partner, and they pay tax on 100% of the money. That's the same as getting a W-2, where you have to pay Social Security and Medicare tax. It's on what we call earned income. Now, I'm the CEO of IBM. I get paid $26 million last year. IBM did not pay me $26 million. IBM paid me $2 million to run their business. I have to pay self-employment tax on that money because I got my hands dirty doing the job. The other $24 million I got because they gave me stock options, and I drove the stock price up. So I made those $24 million because I owned the business. I did not get my hands dirty on that part. That money I made because I had an investment in my business. That money does not pay self-employment tax. So each of those dollars still come through on your personal tax return, but they avoid paying the 15.3% self-employment tax. So if I make $100,000 and I do a reasonable compensation analysis that says someone doing that job could have been paid 60 grand, what I would do is I would pay myself a salary. In an S Corp, you do have to pay yourself a salary so that we know what the difference is between the self-employment income and the ownership income. So I pay myself a salary on $60,000. I pay myself employment tax on there, just like I would any other W-2, regular paycheck. But the other $40,000 I got, not because I was running the business, I got that because I own the business. So that $40,000, I didn't pay 15.5%. So I just saved about $9,000 in taxes.
Hmm.
So I made the same $100,000 either way. But if I was an LLC, I would have paid $15,300 in tax on that $100,000 for Social Security and Medicare. As an S corp, I only paid about $9,000.
Because you didn't have to pay the Social Security and Medicare on that portion.
Correct.
Okay.
So that's why business owners like S corps.
Do you have to have shares issued in an S corp?
Yes. So, in the application process, like I said, it's just submitting a piece of paper. It's called a Form 2553. You submit that to the state of New Jersey and the federal government. And in that, you're creating shares in your business, just like a corporation. And on that sheet, they're asking you how many shares. And if you're the only business owner, it really doesn't matter how many shares you issue. You could say I own 100 million shares, you could say I own 10 shares. If you're the only owner, it really doesn't make a difference. If you plan on growing the business down the road, since it really doesn't matter what number you put down for the shares, I would put a higher number down. So if you plan on giving shares out and partial ownership to people in the future, make partnerships or promote people, you give yourself a little room. But there's no law or rule or anything that says how many shares you offer or why you pick that number. That's almost a little arbitrary. So we like the special tax savings. We like the fact that it creates a separation between my personal and my business life. We can create credit under it. It's easy to transfer because I can just sell my shares. I don't have to change the legal entity. Like a corporation, it's the shares or the ownership, so I can give the shares away, I can sell the shares without changing the underlying business. And I still get the benefit of the pass-through tax. Even though I'm a corporation, unlike a C Corp, I'm not paying tax twice. I'm still paying tax on my personal tax return. I'm not paying it at the corporate level and the personal level. Business needs to be documented. It has to fill out its own special tax return called 1120S. There are a set of fees. If you're starting as an S Corp, then you have to pay the same paperwork you would have done to get an LLC going, and you have to pay the additional fees to file the S Corp with the state and the federal government. You also need to pay a W-2. So as an S Corp, there has to be a salaried employee. So also the added cost of that payroll. Now, people can learn to do it on their own. You can run your own paychecks. You don't have to hire an outside business. Just be very careful on the dates and not to get them wrong, because the fines get pretty steep when you miss these payments. But it is something you can learn to do on your own. Creating a business plan. There's lots of people that have been credited with making the statement. I've always believed it was forward, but people don't plan to fail, they fail to plan. So what happens is, I'm good at what I do. I like doing taxes and financial planning. So I don't think much about it, I just say, let me run out, and I haven't figured out really how my fees are going to work. I haven't figured out how I'm going to market and sell my business. I haven't figured out the best place to have my business. I just started telling people I was in business. They said, well, how much? I said, I'll do it for $200. But then I start doing the work and realize, wait, I've got to buy my software. I've got to buy my insurance. I've got to market. All of a sudden, $200 wasn't a good price. Because now to do the work for this person, it's going to cost me $300. Because I didn't really properly plan ahead of time. I put myself in a position where now I'm not going to make enough money because I didn't think about everything I had to do and all the different costs that were going to be incurred. So before we get into these businesses, and again, this is where some of those SCORE programs can come in. A free resource offered through federally, through the community colleges, where you can get a mentor that can help you do this. Then coordinate with the SBA if you're going to need a loan or financing to get started. And they can help you build out, how am I going to make this business work? What's my budget going to be? What's my marketing going to be? How am I going to get clients? What are my legal responsibility with my clients? How am I going to insure my business? Do I need insurance? How am I going to get supplies? How am I going to inventory that, track it? How do I get back and forth to my clients? It helps us walk through all the different things we're going to need to make it a successful business. So the better we plan this out, the smoother getting that business up and running is going to be, and the faster we get it to profitability, and the larger we can get it to grow. If we don't do this on the front end, I use the example of trying to change a tire when you're driving down the highway.
Mm-hmm.
You know, you're trying to run your business, do your business, but also figure out what it should have been in the first place. You're adding multiple layers of work to something that's already stressful enough, and now you're sharing time you might not have between operating your business and figuring out how to do your job. So I highly encourage everyone, before you take this venture, to build this plan together. Because during this planning session, we also figure out, well, what's the right business entity? What's the right financing structure? How much time do I need to get to profitability? What's the kind of workload I can manage? Sometimes businesses have a big problem. They're so successful out of the gate, they haven't planned for it, and now they can't manage their clients.
Mm-hmm.
And that's almost worse than not having clients, because now when you go on to Google, all you get are bad reviews. So we want to avoid either not having the right process to get started, or not having process in place so that we can manage the success that we have. Fast success can be just as dangerous as a slow start. So here's a couple of the resources you can use. And like I said, most of them are free. They're always giving seminars, teaching you how to use different skills like Excel, how to use social media to market, how to do your financial statements. You know, what does a bank need to see? What does the SBA want to have before they give you money? So you can find where all these programs are. They're always advertised on their websites. And like I said, most of them are free. Maybe there's a $5 charge if they're going to show you a computer skill or something and they have to rent the spot in the library or some office building where it's $5 for the rental fee. But again, a nominal cost to get the kind of education you're going to need to operate the business properly. Remember, there's a lot of people out there that want to see you succeed. And I should have looked this up before I came here. But it's my understanding, if I remember a stat I heard correctly, that 52% of the people in this country are employed by small businesses.
Wow.
Now, don't quote me on that because, again, I forgot to do the research before I got here. But I think that was a recent study I saw. So it's in the country's best interest to help you get your business up and running, because you're going to be half of the economy, half of what gets us through everything that's coming out of the pandemic, half of our economic growth, half of what keeps our communities going. So there's a lot of people that have a lot ventured in making you succeed, you successful. So we've done our business plan. We've figured out our formation. We've met with our mentors. Now the question is, how do we get started? If we don't have enough capital on our own, here's a couple different ways we can garner income or cash flow to get the business off the ground. Again, SBA loans are a great resource. Family and friends can always help. Crowdfunding is kind of a newer topic. That's when we go out in the general public and create a page and say, I need some money, who wants to help? Based on the type of business, there could be grants. So based on gender, race, military background, disabilities, type of business you want to start, the economic need in the area. there's hundreds of thousands of grants that are available from both the federal government, private resources, and state governments to help get businesses started. So you'll have to do your homework to figure out where you're going to find the grants that are particularly going to help you, that fit to what you need to do. And again, the scores, the economic development committees, they can help you find those grants. If your goal is to start a franchise, franchises can help you get those fundings. A lot of times they will self-fund you. You can use your own resources, or some people keep their primary job and use their regular salary until they get their dream job, their own business up and running enough to sustain them personally. So maybe still working at nights or on the weekends, doing something else to help raise the capital you need to keep your business up and running. Now, this is not an exhaustive list, but these are some of the most common ways in which people raise the capital they need. Now, based on the type of business you are, governments always have their hand out.
Mm-hmm.
So, based on your type of service or product, you might have sales tax. If you're a service industry, they call it use tax. So, they're always changing what covers sales tax, what covers use tax. Certain businesses are coming on the list, certain businesses are coming off the list. Certain products are added, certain products are taken off. So we're always going to want to stay on top of this because this becomes very complicated.
What's an example of a use tax business?
I'm an auto mechanic. You're paying me to change your oil. That's a service. It's a sales tax. But I didn't sell you any parts. I sold you my skill set. So it's really sold you something physical, sold you my skill set.
Okay.
But to the government, it's the same tax. So there's no difference in what you pay, or how much you pay. So this is exactly the same as this when it comes to actually writing a check. So it's okay if you don't truly understand the difference. It's understand the government says you owe tax, here it is.
Mm-hmm.
Now the state of New Jersey does have a list of what pays tax and under what conditions taxes are paid. And that's where it becomes very complicated. So if I go to the grocery store to buy a bagel, I do not have to pay sales tax. If I go into my bagel shop, they hand me the bagel in a napkin. I now have to pay sales tax. When I bought it from the grocery store, it was not the end product. I was going to bring it home and use it somewhere in another way. When someone handed me a napkin, they intended me to eat it right then and there. That just became a sales tax item. So some items under certain circumstances may pay tax. Some items under certain circumstances may not pay tax. So we have to be very careful about learning what in your trade and business or service requires paying these taxes. A friend owns an awning business. When he sells to a contractor who's going to install it somewhere, he doesn't have to collect sales tax from the contractor. It's up to the contractor to collect sales tax from the person whose home he's installing that ornament on. But what if I sell it to a business and they're putting that ornament on a building? Well, now that's a capital improvement because it's a commercial building. When I put it on somebody's retail home, I pay sales tax, or they pay sales tax. When I put it on the building, it's a capital improvement. It's not a sale of a product. I don't have to pay sales tax. So this has become very important to determine on your businesses to not just what pays sales tax, but under what circumstances. So again, the same item in this situation may require it, but if you change the scenario, it may not. Federal and state income tax. As a business owner, I still have to pay my federal income tax, my Social Security tax, my Medicare tax. Now, a lot of people miss number 2 and number 3. They say, well, I'm in the 12% tax bracket. So for every $100,000 I make, I'm going to put $12,000 in the bank to pay my taxes. The problem is, forget about the fact that you're in the 12% tax bracket, but there's also 15.3% tax for Social Security and Medicare. So it's not 12% you need to put away, it's 27.3% you have to put away. And a lot of business owners fall behind out of the gate because they don't understand how the tax structure works for the type of business they're running. In the base of your income, you'll also have your state tax, state of New Jersey. And based on where you do business, locally, New York and Philadelphia have city taxes, Yonkers. So if you do work in any of these places, you need to find out if you have to pay city tax also, on top of the state, the federal, Social Security, and Medicare. You have an annual registration fee. So in the state of New Jersey, again, it's $75 to $125. You'll get an audit letter. That always scares everyone. I mean, people first year people call me, I'm getting audited. It's a very simple letter. You open it up, it's got a PIN code inside. They're going to ask you to go to the website, and they're going to ask you questions like, are you still in business? Is this still the contact information? Are you still the contact person? Great. Pay us your annual fee. We'll send you this letter again next year. So everyone always gets scared when you get that audit letter after 1 year in business. The state of New Jersey sends it to you, and they're not auditing you. They just want to make sure you're still in business. And you'll get that letter every year. And you'll pay your annual registration when you file that letter. Certain businesses require licenses. So you might have to find out, are you required to get a state license, permits to work in the neighborhoods or the communities, and are there restrictions on the type of business in a certain area? So I'll use like Airbnb, for example. Lots of people open Airbnb businesses. Towns are filing certain rules against that. So I might be a real estate investor and rent property out, and my rules might be different than someone who's doing Airbnb because of the nature of that business. But you say they're the same. We're renting property. Yes, but under different circumstances. So we need to find out what the legal requirements are for you to operate that business in the area in which you're going to operate. And if you're a mobile business working in multiple locations, we need to find out if special permits are required to each of those different locations. And if you have payroll, employees, it becomes very important to know if they're an independent contractor or W-2 person. Because if you get it wrong, the fines can be very significant. So we need to truly understand how our employees should be titled. One of the rules I try to explain to people is, if you have someone that works just for you, there's almost no way they're an independent contractor. They're most likely a W-2 employee, and you need to pay them a salary. Now, it doesn't have to be a set salary. You can pay them by the hour, you can pay them for the job, but you have to worry about taking that self-employment tax, those W-2 taxes out from a paycheck.
That would be their Social Security and their Medicare?
Correct. And withholding for the federal, the state, and possibly local governments.
Right.
So it becomes your obligation as a business owner to see that those taxes are taken at the time of payment and submitted to the federal government, so they don't have to trust the employee to do it. And you as a business owner have a legal obligation to pay half of that self-employment tax. So the employee will pay 7.65% of it, and you will pay 7.65% of it.
So why does the employee have a self-employment tax?
Because he will retire and need Social Security and Medicare one day.
Okay,
I shouldn't call it self-employment tax. It's Social Security and Medicare tax.
okay,
We call it self-employment tax when you're your own business owner because you're paying both sides.
right,
If you work for somebody and get a W-2, you pay half, they pay half. Being self-employed, I'm the owner and the employee, so I pay both sides. That's why it's double. It's not you're paying more than any other business, it's just you're both sides of the transaction. So we need to be careful about due dates. The state of New Jersey, it is $5,000 for missing your payroll dates or filing dates. So we need to make sure that we are on time and don't miss these dates. Even if I had a W-2 employee that I had to pay last quarter, but I didn't do any work where I required him this quarter. You actually still have to go into the state of New Jersey and file 0 payroll tax, or you are late and failed to file. So you have to remember these obligations, whether you have a 0 balance or not. You have to know to do them. And if you're going to have a payroll, you actually have to make sure that your business is registered with the state of New Jersey, because you have to get a filing PIN, so you can get these files. So this is something you have to plan for, because it takes a while to get that PIN number. Because you have to go online, and you have to make the payments online. You can't do it without the PIN. Sales and use tax need to be paid quarterly. So my business has to remember all these taxes I've collected on each transaction need to be sent into the state of New Jersey, at least quarterly. Federal and state taxes, if I'm self-employed, they would like to see that you file quarterly estimated tax. I will tell you that if you start having large tax bills and you are not paying them quarterly, they will send you love letters. So we try to avoid the love letters. Now, I don't know in April what my NP&L is going to look like in December. That's why they're called estimated taxes. So that when I do my books and records in early January, I look at how much I paid during the year, and I figure out that I overpay or underpay what I owe the government. And I have until April 15th to make that adjustment. If I overpaid, well, I want to file as soon as possible, because that means the government owes me some of my money back. They owe me a refund. If I underpaid my estimated taxes, that means I have to write a check to them. Now, based on how big that number is, interest starts accumulating. And if I don't have it paid by April 15th, penalties start accruing. Keep in mind that when you file an extension for your taxes, that is an extension to file the paperwork, not to make your payments. There is no such thing as an extension for payments, unless you're, there's some extent, like military, active combat, things like that, but for most business owners, no, there's no exception to late payments. The state of New Jersey will charge you an instant installment agreement, 5% penalties per month to 25% of the debt owed, starting the very first day you're late. And they will deny your extension if you owe the money. So now you've also filed your taxes late. Not only have you failed to pay them, but now you filed your taxes late, and that's more penalties. So we need to be very careful about these dates, because the penalties can accrue very quickly. The first day you're late on a federal filing for a business is a $2,400 penalty. And it accrues $2,400 per year until it is paid. So, or filed. So we need to make sure that we pay attention to these dates. If I can't get the report done on time, I can file an extension and avoid the $2,500 non-filing penalty. I can't avoid the not paying penalty, but I can avoid the non-filing penalty for a little bit of time. We got to pay our annual fees on time, or we lose our license, or the protection of our name and business rights. Permits, you always need to stay on top of permits, see how long they last, do they expire X number of days. That'll change by job, community, so that's one-offs. And licenses, you need to figure out how often your license needs to be renewed. If you require one to operate, do I need to renew it annually, semi-annually, every 3 years? Do I need continuing ed? Do I need proof of insurance? What is it I need to do to maintain that license between the time I get it and the time it expires? So a week before, we don't find out that I needed to take 6 courses in advanced welding, and there's none offered that week. Well, my license just expired. Now I can't go out and work legally. So we want to stay on top of how and what we need to do to maintain the right to operate our business. So, we all love what we do, but we do one day want to retire. And that can mean different things to different people. I worked in Wall Street with a lot of people, worked at Goldman Sachs, and a lot of people, when they got enough money, retired to go teach. because it's something they always wanted to do. But they had a more expensive lifestyle, so now they have the ability to live that lifestyle, but do something that's more fulfilling to them. Some people want to chase their grandkids around. Some people want to do some philanthropic or do a lot of community work. It's whatever you want it to be. But the sooner we start thinking about it, the easier it's going to be to spend those days we're working to make this happen. Now, people say, well, I don't really know what retirement's going to look like. I've got all these other things I have to worry about. I use this as an example. If I told you you had to leave New Jersey and be in California in a week, but I didn't tell you where. You didn't start driving because you didn't know the final destination. 5 days later, I call you up and I say, I need you to be in Los Angeles. Well, if you haven't started on your way to California already, there's no way you're getting from New Jersey to California in 2 days. You waited till you had your final destination, but now it's too late to make it happen. If I just started on that road to California, at least I know what direction I was going. I didn't have my final destination, I didn't have it nailed down, but at least I had an idea. I wanted to go that way. Now, when someone calls me 5 days later and says, Los Angeles, well, I'm almost to California already, so now it's not hard for me to change direction and reroute to that final destination. So a lot of times it's just starting down the road is the most important step. Not knowing where the road's going to end, but at least getting on it. Because we know at some point we're going to want to transition the business, or at least scale down how much activity we're doing. I mean, I love what I do. I'm going to do it well in my 70s or 80s, but I'm not going to be doing it full time in my 70s or 80s. I'll be doing a little more teaching and things like that, but I'll still be working. I'll just be doing a different structure. There's different ways that we can set up retirement accounts. Setting these retirement accounts up, there are ways we can use them to reduce our tax liabilities. So we can defer the taxes today until we get to that future. So we can basically use the government's tax deductions to help start funding our retirement. Some of the most common types, what we hear, is IRAs, individual retirement accounts. It's like when you go to the bank, your investment place, and you just give them up to $6,000, $7,000 if you're over 50, and you say, I would like to start a retirement account. A SEP is a self-employed pension. I, as a business owner, can have my business, pre-tax, start putting money away from my retirement as a pension. So it's another way I can use being self-employed to fund my retirement. We have 401ks. They're the most common, it's what you heard of the most. But I, as a solo business owner, can also set up my own 401k. I don't need to be a corporation to have a formal retirement plan like that. Now, SEPs are much easier to set up. They're set up like an IRA. You just fill out some forms. You don't have to register the retirement account. But there are limits, higher limits, $7,000 if you're over 50, $6,000 if you're under. I think $59,000 this year for a SEP. But it can't be more than 25% of your income. After expenses, it comes out to about 20%. A 401k is a very formal structure. But because I'm formally structuring it, I can make up my own rules within limits. So say I'm in the real estate business, and I want to start making sure I can put as much money away in my retirement. But I also want to flip houses. So I might need some of that money for a project. So I don't want to put it in a retirement plan because then I can't access it. Well, if I set up a solo 401k, I can add something called in-service distributions, which would allow me to create a self-directed IRA and take the money out of the 401k and move it into that account. Use it for the project, and then put it back. So yes, it's more formal. Yes, it's more difficult to set up, but it gives me the flexibility to do certain things the other ones don't. So I wouldn't necessarily rule it out, depending on the type of business you're in, you might need it. Simple plans, they're easy to set up. If you have employees, there's certain payment obligations. And there's a category called KEHO, you might hear that term, that basically refers to individual-owned retirement plans as opposed to corporate retirement plans. So KEHO, I just put that on there because you might hear the word, really kind of encompasses any of these as a small business owner. Simples also had something called the Simple IRA, as opposed to a Simple SEP. Simple IRAs have more phased out. You might still see some around, but they've moved mostly to the SEP structure. And collection of income. So part of my retirement might be, as I build my business, I've got 2 sons. Maybe one day they'll take the business over. But rather than give them the business, they can buy it from me. Or we'll do split ownership and I'll continue to get some revenues from it. So I can either sell part of my business or I can take passive income from it. Maybe I've scaled back on how much work I'm doing, but I'm still getting some of the profits. Maybe that's how I can use my business to help fund my retirement. So not putting money into a retirement plan itself doesn't mean I'm not funding my retirement. By building a business that can sustain beyond me, I can pass it to somebody else, another employee, a buy, I can sell it, pass it on to a family member, and then find ways to continue to either get a lump sum payment or a lifetime draw or continual payments from that business in perpetuity. So just because I don't have it in a retirement account doesn't mean I'm not helping myself get to retirement. So when you think about retirement, how and when? Well, you see I got terrible penmanship, so. When we all start out, especially when we get our business started, we have a lot of human capital. That's my ability to generate money. What is it I can do to generate money? For me, I help people with their investments. I give them peace of mind getting their tax work done. I do consulting. That's a lot of intellectual activity. So my human capital can last as long as I can provide good advice in a timely manner that works for my clients. If I work the road crew and I'm picking up 50-pound rocks all day and moving heavy objects, my human capital is going to wear out a lot faster because my body can only take so much of that activity before it wears down. So the type of job you're doing may impact the length of the human capital you have, your ability to generate the money you need. When we start a business, what we don't have is a lot of financial capital. We're usually broke. But the goal is by using our human capital to generate income, we're starting to create financial wealth. And the goal is that we get this number high enough before that number gets low enough.
Mm-hmm.
So we hope our retirement date is somewhere over here, but no later than here. So this is where, if I can continue to generate money for my business after I leave, my human capital might come down a little bit, but it'll still carry outward. So it helps me get to that retirement sooner. When we talk about retirement, everyone's like, I need $100 million or I won't be able to retire. I prefer to think of retirement not by how much you have in the bank, but by how much cash flow you need. What do I need to sustain the lifestyle I want to be accustomed to? If I need $60,000 a year, and I'm married, and I'm getting $23,000 in Social Security, and my wife's getting $17,000 in Social Security, that's $40,000. So what I need my retirement to do is cover that gap between 40 and 60. So I need to give me another $20,000 a year. I could do that by a part-time job. Maybe I created a pension for myself. I worked a job that had a pension. Maybe while I was working, I used one of those SEP pensions. What I'm trying to do is use this time to cover that gap when I get to retirement so that I can live peacefully. Doesn't mean I have to have $100 million in the bank. But I do want to do that planning earlier and figure out what retirement wants to look like so that I know what that number is going to look like. I know how much finances I have to save. I know what that gap's going to be. I don't want to figure that out after I retire, because what if I didn't save enough?
Mhm.
What if I didn't create enough of that cash flow? Well, now I have a chance of running out of money. Or having enough, but over time the purchase power eats it up. So I lose quality of life year over year because I'm losing the ability to use those dollars for the same thing. Inflation will lead into your retirement, because hopefully you're going to retire for a long time. When Social Security was first set up, the average male lived roughly 3 years in, and the average woman lived about 7 years in retirement. There wasn't much stress on the Social Security system. About 80% of the country had a pension. So we had Social Security and pensions helping to fund a very short period of retirement. Today, the average person will live over 30 years in retirement. And only 17% of the country has access to a pension. So now we have a much longer period of time to fund for and fewer governmental supports or corporate supports to do it. So that puts the burden on us during our time of accumulation to make up for that. And the sooner we think about it, the easier it's going to be. There's a concept called compounding interest. What that does is it tells me if I put $1 away today, how much will that dollar grow over time? Albert Einstein came up with it, or theorized it under Rule of 72. Now, it's not perfectly accurate, but for long periods of time, it does help prove the example. So if I invest, there's a famous example that's out there. If I put $5,000 away between the age of 21 and 28 and do nothing else, then I put it away from 28 to 55. When I get to retirement, the first account will have more money in it, even though the second account put 300% more money into the account, because compound interest started growing on this money first. So it actually became more powerful than saving 300% more money by letting it grow. But people are like, oh, I only have a few dollars to put away. What good is it going to do? I use the example of planting an acorn. A cute little acorn is about this big. I go and I drop it in the dirt. I come back a week later, what do I have?
Little sapling, maybe a little
A puddle of mud where I put
sprout.
the acorn and watered it.
Yeah.
I come back 6 months, what do I have? I've got that little sapling. It looks like the weeds around, a little harder to pull out of the ground. Come back in 5 years. There's a tree, it's probably about that wide, maybe 7 or 8 feet tall. Come back in 10 years. Probably about 20 feet tall, it's probably about 1.5 feet around. Come back in 20 years, it's about 50 feet tall, and it takes me a couple minutes to run around it. The thing is, the tree was growing at the same pace almost the entire life. But it didn't have much when it got started, so it was hard to notice. But when it kept doing what it was going to do, over time those leaps and bounds become much bigger. And the same thing will happen with our savings. It might not seem like much when we get started, but those little acorns will become oak trees over time. And the more we plant, the better off we're going to be. Not expecting to see an oak tree next week, but 6 months to a year starting to see some sort of results.
Mm-hmm.
And then 5 years seeing more results, and 10 years, and 20 years. Remember, retirement is a long race. We're not worried about what's going to happen next week. We're worried about what's happening next 10 or 20 years. And the sooner we start that, the better off we're all going to be. Now, this is an important topic that most people don't think of. Insuring your businesses. Remember, I talked about creating a legal entity that separates your personal liability from your business liability. Well, whether I want to protect the fact that if my house burns down, my insurance company will replace it, I also have to worry about as a business owner, what are the risks I face that I want insurance for? If I'm a tradesman and I do something wrong in someone's house and they get injured, I want to make sure I have liability insurance. So that if I'm ever sued, my business can absorb those lawsuits. Say I have employees that are driving cars. Well, I need to be careful about the liability of them driving around. They get into an accident. Workers' comp. What if one of my employees or independent contractors gets hurt on the job? Now, a lot of people call all their employees independent contractors so they don't have to pay workers' comp. I promise you that if somebody gets hurt on the job and you call them an independent contractor, it's the first thing that's going to be challenged in court. And then if it turns out you lose, because there aren't many sympathetic judges that are going to rule in favor of a business owner over an injured employee, that they were an employee, not an independent contractor, and you didn't have workers' comp or proper insurance, now you're in a lot of trouble. So it's a big risk to take for small savings. So that's, you want to properly identify your employees. And even if you really do have independent contractors, I'm not an insurance agent, I'm not selling anything here, but I still encourage people to get workers' comp insurance in case that independent contractor gets hurt and you have an unwilling judge and an evil lawyer that says, we don't care. You want to make sure that you have some sort of protection. We might have to worry about the products we sell. Maybe I sell a beautiful lavender soap and somebody leaves my store and it turns out they had a reaction to it. Well, I've got to make sure that I have liability against the products I sell. So I'm sued because of a product, not my problem. So if I did bad work, I need liability for my errors. If I sell products, I need to make sure those products are covered. Liability in the vehicles I use. A lot of business owners work out of their homes. They might have clients coming by. You need to make sure that you've adjusted your homeowner's insurance. Because if someone slips in the middle of the winter on your front porch, in the accident report they say, well, I was coming to meet my accountant at his office, my homeowner's insurance is going to smile and say, oh, that's nice. We don't have a business operating out of that home. It's not our problem. I'm now no longer covered by my homeowner's insurance. So we want to make sure that if we are going to operate out of our house, people, employees, clients, someone might come by, that we've added the right riders to make sure that we do have coverage. Workers' comp, we covered that. E&O and D&O. This is called errors and omission, directors and officers. So I run a business and people buy my intellectual property. If I'm wrong, errors and omissions would cover me if it was an accident. I run an organization, like a charity, or I'm the board of a chamber of commerce. I'm a director. Directors and officers would cover the liability. So we want to be careful that we have the right liability type coverage in place. Specialty business that you might need based on your occupation. If you work in some sort of a fueling or chemical company, you might need some special insurance. When you load oil into heating drums or transport some sort of flammable material, you might need specialty insurance. If you work down around a marina, you might have to find out what those rules are. Based on the types of jobs you're going to get. If you're going to work for a government or a certain community, you might have to get what's called bonding. Bonding is you get a company to put up insurance that you will complete the job as required, compliantly. So that if I'm halfway through building a bridge, and all of a sudden my business goes out, well, the town's in trouble because they got half a bridge. Who's going to finish the job? It becomes this bonding company's job to go out and find someone to finish that job off. So it's insurance against your inability to complete the project in the correct manner. So that's something else, based on the types of projects, you might have to buy this to apply for certain things. And you might also need unemployment and disability if you have payroll. So again, this is insurance, and then based on how often you file for unemployment or people getting injured, the state will adjust what your rates might be. Now these are some of the different resources I talked about. We have America's Small Business Development Centers. Your local chambers of commerce are great. Every county has got their local development community. The state also has one. Great resources to find your grants and what's available in the community. Small Business Association, SCORE. Again, it's not an exhaustive list, but these are very common, easy to find resources. And their sole purpose of being in place is to help you grow your business. So I highly encourage people to use them. Sean Keating, I'm local to your community, and if anyone has any questions, feel free to reach out.
Thank you, Sean.
Appreciate it.
Very informative presentation. If you'd like to get in touch with Sean and you have trouble reaching him, please feel free to contact me, Lisa Kelly, at the library, and I can give you his information. Well, that was great.
Thank you.
I don't know how anybody ever sets up their own business, at least one that complies. A lot to be aware of, that's for sure. Yes, very good, thank you.
Thank you.